Hello again, short traders. This is Sunil Thakur of stsuretrader.com. Make sure of the spelling stsuretrader.com. Okay, in this video we have already finished talking about the basics of technical analysis. Let me just guide you through a quick outline what we've discussed so far. We've discussed price quotations, the open, high, low, close, and the volume. We're going to take up volume, of course, in later videos when we come to advanced videos, as well as the risk management. We've talked about line charts, 3-line break charts. This was in video 1. We've talked about Renko charts and peak and trough analysis in video 2. In video 3, we talked about bar charts and candlesticks. And in video 4, we took up trends and indicators. Okay. So, in the future videos, we'll be taking up the advanced trading. We're going to look at individual stocks one by one and combine everything that we have learned so far to date, from the first to the 4th video. Now this one is the 5th video, and we're not going to be taking up yet risk management and capital management. Okay, what we will be talking about is what I've been requesting from the very beginning. Please go over to our Facebook group page. Here we are. This is our group page here in Facebook. Go down to files, and in files you can download any of the PDF file, whether it's US stock tips or binary options tips. Okay, I already have that one on file, so I can show you that one. Okay, this is the US stock tips, and right on the first page you can see a link to open the CFD trading demo account, virtual account, and you can see a link to open the binary options trading demo account or virtual account, whichever way you want to call it. In any case, I give you my Boy Scouts guarantee. Like in day 1, there's no risk, no payment, nothing to lose. You're not even going to get a telemarketing call forcing you to open a live account. Okay, so do sign up for both of them, the CFD and the binary options trading account, on the virtual basis. This is the US stock tips, and here on the binary options tips you'll find the binary options link up here, and you scroll down and you'll find the CFD link down here. Okay, please do sign up for both of them. You'll be doing you and me a very big favor here, so we know where we're talking from, we know where we come from. And the purpose of this video is I'm going to give you the reason why I want you to sign up for both of the accounts on a virtual basis, on a demo basis. It's because the profit computation is very different, and the way it's traded is very different. They both are, of course, market related, as we've been talking about in technical analysis, and they both make use of technical analysis. However, the way you compute the profit is very different. Okay, by the way, both the demo accounts are absolutely free. I give you my Boy Scouts promise on that, so please do sign up. Click on those links and sign up. Let me just show you here the difference. Okay, here is the CFD trades, for example. With CFD trading, the time is unlimited. You can buy a stock on the long basis, meaning you're buying and hoping to sell it later at a higher price for the profit, or you could sell short a stock. Even if you don't own it, you could sell short a stock hoping that the prices will drop down, and when the prices drop down you can cover it later on at a lower price in order to generate your profit. Okay, so this doesn't matter, these arrows here don't matter really whether you're buying or you're selling. Okay, we're just looking at the this here's the loss possibility and this here's the profits possibility. Time, as I said, is unlimited, and that's why the arrow is just there. Okay, you can hold on to a stock from anywhere from a few minutes to a few hours, a few days, a few weeks, a few months. It's really up to you. Now, if you're using a ×1 leverage on the CFD, that equates to no leverage at all, which means for every dollar you invest in that stock, you're using just your dollar, and that's all there is. Okay, now if that stock price, let's say you're buying on the long side, you expect the stock price to rise, you have to take into account the spread. Okay, the spread is a very important factor because the spread, although it's a small amount of just about maybe $1 per share, it does matter because you have to buy at the higher price, and then as soon as you click on the buy, you might wonder, why is it showing a loss? Well, that's because of the spread. Plain, pure, and simple. It's because of the spread. You have to cope with more than $1 in order to generate a profit. And as time progresses, if you're correct in your prediction, excuse me, as time progresses, if you're correct in your prediction that the price will rise, and as it rises, if let's say it goes up by 5% over a certain period of time, you're generating 5% after it has broken across the break-even point, which is the spread. So after you've generated a 5% profit over the break-even point, you will have a 5% profit on the amount of money that you used to invest in that stock, which is the minimum is $100 for CFD trades, regardless of whatever price that stock is. So even if it's priced at $500, for example, and you're just investing $100, that means you own only 0.2%, 0.2 of that stock, or about 20% of that stock. And if it goes beyond $501, it goes up to a certain percentage, you make that much money. Okay, if however you lose in following the direction and the stock goes down, you're also losing an equal amount or a little bit greater amount because of the spread actually. So you're losing about 5% plus the $1. Okay, so this is just an example. Now with CFD trading, you have the option of using leverage. The reason why I always give the advice of not to use leverage, I always tell you to use ×1 leverage, which is equivalent to no leverage at all. It's for safety reasons. Because when you use leverage, you can definitely increase your profit potential, but bear in mind, you can also increase your loss potential. So, if you're using it, let's say a times 10 leverage on a $100 investment, let's say, okay, you invest $100 and you're not using leverage at all, and you're expecting the stock price to go up, and it goes up by 5%, you're making 5%. Okay? If you're using times 10 leverage, for every dollar that you spend, you're borrowing $9. So the 5% times 10 is not going to be 5%, it's going to be times 50. So if you invested $100 with no leverage, you would have made $5. But if you use $100 with times 10 leverage, you would have made $50. But that's the reason why I discourage the use of leverage, because the risk is equal, if not even more. When you lose the money, you expect the stock to rise, but it didn't rise. Instead, it fell for one or another reason unknown to us. Despite how good our technical analysis is, if it falls, it falls. So if you're using times 10 leverage, you could lose more than 50% of your money quite quickly. Whereas if you're not using leverage, you could only lose, let's say, 5% as usual, if it falls by 5%. So that's the times 10 leverage. Of course, you also have the options of using times 100 and 50 and 25. It's really up to you. Now, why I wanted to bring this up is because we all have different time zones. We have our day jobs to take care of, and we have our own risk appetite, how much we're willing to risk on a trade, how much we're willing to lose on a trade, and we have our own profit goals, how much profits we want to make. Okay? So that's why I'm bringing up this topic right here. This is for CFD trades, contract for difference. As the word itself said, contract for difference. You're only trading for the difference in terms of percentage. As you enter, you can enter with as little as $100 to buy a stock, regardless of what price that stock is. Or you can sell short a stock if you think it will go down, and just reverse this one. If you think the stock will go down, and it does go down, and you're using times 1 leverage, it goes down by 5%, you're making this much profit. If you do use leverage, you'd be making this much profit, but if in case it doesn't go down, in case it goes up, if you're using leverage, you'd be making this much of a loss. Whereas if you don't use leverage, you'd be making a much smaller loss. Okay, I hope that one's clear. If you do have any questions, don't hesitate to put a post on the group page, and I hope it will be of benefit for everybody in the group. Now let's talk about binary options, because binary options are totally different altogether. That's why I want you to take the virtual account or demo account for both the CFD and the binary options. Okay, sorry for my goofy drawing here. I'm really not good at drawing. Anyway, with binary options, time does not continue forever. Unlike with the CFD, you can hold your investment for weeks on ends, months on ends, years on ends if you want to. With binary options, there is a specific time limit. But don't worry, the expiry or the maturity time is in your control. Which is why if you look at the binary options tips I give out, and even the US stock tips I give out, when it comes to binary options, I usually recommend anywhere from 2 days to 2 weeks. Why I recommend 2 days to 2 weeks is to give yourself enough time to decide whether you want to stay into the position or you want to sell out. Remember, when you're using a very short time frame, like let's say 5 minutes, you won't have the option of selling or closing the option. So you have to wait for 5 minutes, and your profits or loss are both computed exponentially. So you can make a lot of profit or you can make a lot of loss in a short period of time. The good thing with binary options is if you trade a period that is greater than 2 days and a maximum of 2 weeks, you can actually trade 365 days a year, a maximum of 1 year. But why I don't recommend that is, if you're buying, let's say, a $4 stock, that $4 stock can really double or even more than double in a period of a year. But if you're talking of just 2 weeks and you want to maximize your profits, you can always buy the stock on the binary options, and at any time you're in the profit zone, you always have the option to sell at any time within the profit zone. Unless, of course, you reach towards the end, the last few minutes, right before the expiry or the maturity of the option, in which case you have no choice but to wait for the option to expire. Now, the profits are exponential and so are the losses. So if you expect a stock to fall, for example, and the price of that stock is falling, and you have a 2-week expiry date on the option, as the days pass by over those next 2 weeks, okay, this is the start of the week, this is the last of the 2 weeks. As the days pass by, if the stock price is falling, your profit zone is increasing, and it will reach a certain point in time where your profits are actually quite high, probably even more than 50% of what you have invested, okay? So you could actually sell that right now and just pocket the 50% profit and put it in the bank. Or you can decide to wait for it to reach the maturity date and the maturity time, in which case you can actually make up to 100% of the amount that you invested in that particular trade. So, again, going back to the CFD, as I did mention in the web page that I have on binary options, if a stock moves up by 10% and you're buying, you only make 10% profit. Whereas with binary options, you can make up to even 100% profit. Likewise, if the stock is moving down and you sold short and it moved down by 10%, you could make 10% profit. Whereas with binary options, if you bought an option that's saying that the price will go lower, even if it just goes lower by even just 0.1%, as long as it's lower by just 0.1% at the end of the maturity, you can make close to, if not 100% of what you invested. Now let's talk of investments. With the CFD, the minimum investment is $100 in order to buy or to sell a certain share of stock. But I generally recommend at least $500 or even $1,000. The $1,000 would be better actually than $500. You'd need to invest about $100 per stock that you're expecting to either rise or fall. And the good thing with CFD trading is you can copy other successful traders, and you can also use $100 just to copy them. Regardless of what amount they are trading, it will be proportionate in your account. Whereas in binary options, you can open a live account with only as little as $10. Here in the Philippines, $10 is just a little over 500 pesos. Well below 600 pesos definitely. And you can generate a profit of very high percentage on individual trades of just $1. Okay. However, if your prediction was wrong, you could lose that full dollar. Whereas in CFD, you need to invest about $100 per share. But the good thing is you can just hold on to it for quite a long period of time. I'm not sure if this video already helps for you to understand the difference of CFD trading and binary options, which is why I'm requesting you guys again, please sign up for a demo account for both the CFD trading and the binary options. The best way to learn is by trying it yourself. You're not going to learn how to ride a bicycle by watching somebody riding a bicycle. You're not going to learn how to swim by watching somebody swimming. The best way to learn how to ride a bicycle is to ride a bicycle yourself. The best way to learn how to swim is to try swimming yourself. And with the demo accounts, the virtual accounts that I'm offering, you can ride a bicycle or learn how to swim without drowning and without falling, because these are just virtual accounts. It's like you're playing a game of Monopoly. You're not risking real money, okay? You're not putting your investment in it. You're using virtual money, artificial money. Of course, you cannot withdraw that money. You cannot withdraw that money. It's virtual money. It's there for you to practice on. It has no expiry date. It is there continuously for you to practice on and improve your trading skills and technical analysis skills. You can always, of course, use real money only later on once you are sure of what you're doing and you know technical analysis very well, and you have convinced yourself that you are a good trader. So with that said, please do sign up for both the binary options and the CFD trading accounts on a virtual basis. I guarantee you it's absolutely free and you will not regret trying it out. That way you can also practice everything that I have taught you, as well as the tips that I'm providing you on a weekly basis. You can practice everything and check for yourself which one is more profitable or suitable for your needs. Okay, with that said, thank you, sure traders, for watching this video, and I'll see you again in the future videos where we're going to be talking of advanced technical analysis and trading. If you have any questions, please don't hesitate to make a post on our group right here, SC Sure Trader, where we use the name Sure Trader, but it is SC Sure Trader. Okay, this is our logo. We have a global perspective, and these are candlesticks right here. So please do join the group. In case you're watching this on Facebook, join us and we can discuss more as we progress. Thank you again, everybody, for watching this to the end. God bless and happy trading. Bye bye.